Go. So, yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great Friday because the stock market is having a phenomenal Friday. Check this. Hey, that kind of rhyme. Phenomenal Friday. Check this out. The QQQ is up 1%. We did have a little hiccup at the end of the day there, but still, this we literally closed at an all. No one can complain. It's still at an all-time high. Looks like Tesla was the only exception there. The whole watch list is green. But check this out. Let me give you a quick portfolio update because most of I can't believe this. Our Moomoo account is up nearly 8% on the day. So check this out. Here's our Robinhood portfolio. This is known as our dividend only portfolio, where every stock in here actually pays a dividend. Year to date, we're now up 18% year to date, which is pretty cool. And on the day, we're up 1.69%. Really, Constellation Energy led the gains today. Here's our total percent change on every stock. So luckily, we are green on every single holding in here. Also, we have a Roth IRA. Our Roth IRA had a little hiccup at the end of the day as well, but we're still up 1% on the day. And my Roth IRA looks so messy right now. I'm like scared to show it because I got too many stocks in here and I don't know what I plan to do with this account right here. So it's subject to change. But yeah, check this out. Yo, what up, Plasma? Yo, I saw your comment there. Good to see you, Looney. Good to see you, Plasma. And Crispy said, yo, Nathan, how about Fix? I bought it a couple days ago on the dip. Yo, if you bought this stock a couple days ago on the dip, you must be extremely happy because check this out. Our largest holding, Comfort Systems, reported earnings today, and we're up $1,700 on them because the stock is up 8 or 19% on the day. Absolutely incredible gangbuster earnings. I'll actually go over the earnings really quickly. And the net income literally doubled, which here, I'll show you this right here. The net income literally doubled. So the EPS doubled, or actually look at that. The net income went up 99, but the net income per share went up by over 101.7 because they bought back so much of their own company. But check this out. The PE ratio is only a 41 when literally right before today, oopsie, right before today, it was anywho, Comfort Systems had the most phenomenal earnings ever. Check this out. Their sales, the revenue grew 35. So the revenue grew 35, but the net income grew 99. Again, that's that net margin expansion that's really shining. Their net margin grew 47%. Like no analyst expected this. Check this out. The analyst expected 623. They reported 823. I mean, it was a beat on every metric, like incredible earnings. So that's an HVAC MEP, mechanical, electrical, plumbing play. Another company that just does phenomenal is Powell Industries, new all-time high today. I can't believe it. Congrats. I know this one isn't really too popular. You know, Comfort Systems, Powell Industries, and also Amphenol. These aren't really too popular. Amphenol also just reported earnings yesterday or the day before, and they were like just as good as Comfort Systems. Like the revenue grew 53, net income grew 106. They grew their margins to a record 20%. I'm so happy with my holdings right here. So yeah, Amazon, we just bought another share of Amazon on the dip as well during that. It was right the day before the AWS crash, and then they just continue to go up, which is pretty cool. We also bought another share of MUSA. Yeah, hey, sorry, we'll get to the stocks here in a second. Let me finish this portfolio update because, hopefully no one can see my password, but well. But check this out. I can't believe it. Our Webull account, this is known as our like risk on portfolio. We're up 2.8% on the day, and we're up 24% all time. And check out AMD. We're up over double now for the first time ever. AMD hit a new all-time high. I mean, up 7.6%. Incredible day. No real news, just momentum. Just a great Friday. Hope everyone's having a great Friday. I mean, you probably are because stocks are going crazy, but check this out. AMD's up 7. Path is up. We're covering some of our losses. Did we have anything in the red today? Let's see. Disney was red 1.3. Sprouts Farmers Market. Of course, Clear Secure is actually getting hurt from government shutdown news. If anyone's heard, that's that airport company. Anywho, but yeah, great day overall for me. Hopefully y'all's portfolio did great as well. So yeah, let's look at some of y'all's stocks here. Thoughts on ALAB. So let's look at Astera Labs. This is one of the companies I love. I mean, this is a premium company. The reason they actually gapped down on this day was because they partnered with ARM to develop a chip, and it was seen as like a lose for Astera Labs and a win for ARM or something. It was really weird. Let me see if I can find that. Astera Labs to acquire AIX Scale Photonics for AI infrastructure enhancement. Check that out. So they're acquiring a company. I actually really like that. So let's go look at their numbers right here. This is why I actually like Astera Labs so much, not just because of the industry, but because of the growing fundamentals. Like this is incredible. The revenue went from 76 mil to 190 mil. The revenue's up 150% year over year, not just revenue, but net income. They made 50 mil of net income this quarter, a new record. Also, fortress of a balance sheet. This stock has no debt whatsoever, over $1 billion in cash and no debt. So, I mean, just absolute incredible in the orange lines, but the analysts expect they're beating on revenue, beating on net income every quarter, beating on EBITDA. Like they expected 54 mil, they reported 75. So, just incredible. So, yeah, I actually really like them. I put them on the watch list. Yeah, it's crazy. I hope it drops so I can buy more. Yeah, me too, Crispy. But yeah, Comfort Systems is just amazing. Ford went crazy today. Earnings report dropped. Yo, Ford. I remember I got like a wow, 12%. That is incredible. What were their numbers? Let me look at them actually if they're updated. So check that out. Analysts expected 1.9. They reported 2.5. That's a big. Oh, that's the EBITDA. So here's the rest. So they beat on revenue. They beat by double on net income. That's insane. Was that real? Let's go check. It wasn't real. But they still made around 1.3 billion in net income, which is good. Still net income positive quarter. So revenue's up 9.4, made 1.5. Anyway, I'm so glad you made money on this one. As you know, I don't think this is the kind of stock to really outperform the S&P. Like they're lower than they were in the year 2000. You know, they were $25, now they're 14. But here's the coolest part that I didn't mention is the yield you get in the safe dividend. You know, a 5.5% dividend. You remember they made we'll just call it 1.4 billion in net income this quarter. Let's see how much the dividend costs for fun. And the dividend costs 600 mil a quarter. So they could easily afford the dividend. So nice. So that's Ford for you. Carmen, what up? What is the earnings with RIG? Is that the ticker symbol? It's gonna skyrocket to 15 or $20. So let's check it out. Hey, what up, Accelerate CRMD? What up, Philip Stock? Hey, do we still want to look at that one? Hey, what up, Luffy? What happened to Deckers Outdoors? Yeah, Deck is the guy or the stock that owns UGG, like the shoe brand, and they showed like declining growth or something. Kind of like just experiencing what Lululemon and Nike is. We'll actually check them out if you remind me. Oh, I just chugged this water. Okay, so this is Transocean. I don't know what this is, but unfortunately, the stock is at an all-time low. They're a pretty big company, a $4.3 billion market cap, and their earnings are on October 29th, so they report earnings in a few days. What are the sales? So this is good. The revenue's up 15 after it grew 18. That's not good, though. They lost $1 billion. Remember, the whole company was worth like 4.4, and they lost $1 billion this quarter. That's not great, and they lost 500 million that one quarter. But if we go to the operating profit, it says they're actually making money every quarter. That's a weird dilemma. Like what caused $1 billion loss in the assets? I don't know. That's interesting though. I guess you could really you could look at the EBITDA because it excludes all that earnings before. But yeah, something happened to their EPS number. Anyway, I don't even know what they do. Let me go find out what they do. They're an oil and gas company. Okay. What's the yield? They don't pay a dividend anymore. All right. Well, I wish I'd give you more thoughts on them. Looks like some oil and gas play. All right. So, what app is this, brother? Hey, Detox. What up, man? Yeah, by the way, this is a brokerage where you get stocks on. If you get it, or if you want to get it, it's in the link tree in my bio. First link there. Remy said, do you have it a second account or someone? Or someone impersonating you? Yeah, someone is impersonating me. By the way, I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. This is my only account. I'll never follow you or DM you, nothing like that. Someone said race stock got smoked. Yeah, check that out. They had a huge gap down, and guess what? I decided to buy the dip on Ferrari stock. They're almost back to my cost basis. I'm just like barely down on my shares. You know, I didn't just buy them because they're on the dip. I bought them because they're, I think, a good company with great numbers. They're making 400 to 500 mil of after-tax net income a quarter. You get a near 1% dividend. They're doing 1% to 2% share buybacks. A lot of their cars are backlogged for many years, even if you want to get it. Like their sponsorship revenue is so high margin and networking. There's so many cool. I decided to buy them in this portfolio right here. Okay, so Hey, Mike. Yeah, hey, try not to spam there, buddy. Yeah, let's check out Nebius right here. So, Nebius, this is actually a company owned by NVIDIA. And again, just because NVIDIA owns a company doesn't mean you should always go do your own research on it. But yeah, 3.46% of their portfolio is Nebius. And one of the cool things about this stock is what I just clicked? Their huge deal with, whoa, what is this? Uber and Nebius invest 375 million in autonomous driving company, Avride. That's interesting. Plans include robo-taxi services in Dallas and delivery robot deployment through Uber Eats. So that sounds interesting. Uber and Nebius going into some deal. Well, didn't make the news because it's kind of old at this point, but they signed a $17 billion deal with Microsoft. And that's what's so cool. If we go to even before that deal, this was already a super growthy company and I liked them. Yeah, hey, Remy Equalizer, that's not me. Yeah, watch out for people impersonating me. But yeah, check this out. The revenue went from 14 mil to 100 million year over year. I mean, check out that growth. That's what I love to see. 14 to 100 million, and 100 million this quarter was a record. Analysts are expecting in 2 quarters 265 million. So I love the growth here. They're still losing a bit of money, and they're probably overvalued here. But I can totally see why they're doing this good. And that new investment in Uber or whatever seems pretty interesting. Someone said Nebius will be huge. I'm all in Nebius. Hey, nice, man. I wouldn't be all in that one, but they like an interesting name to have maybe a little bit of money in it. I recommend a diversified portfolio. I wouldn't be all in just one name. Again, not financial advisor. By the way, yeah, watch for people impersonating me. I sell nothing. I have no course, book, WhatsApp, or nothing like that. I'll never follow you, DM you. Yo, Papa Dan, dude, with the 5 pumpkin lattes. Dude, if you got a stock, you look at Papa Dan. Hope you're having a great Friday. My Friday's going amazing. Check this out. Our portfolio's up 8.4%. I mean, just nuts. So let's see. Clip said PLMR. I believe this is the earthquake insurance company. So yeah, hey, it is Jordy. So this is Polymer Holdings. If you're looking for an earthquake insurance name that actually has some good growth behind them, check out this stock right here. I would actually recommend this one. They're on my watch list as well, but check out the growth. The revenue is up 55 after it grew 45 after it grew 13. So the growth rate is growing. That's what you want to see. And, not just growing the revenue, but also the net income. It grew 80%. That means they expanded margins, 16% growth on their net margin year over year. This is what you want to see for a company: growing bottom line, growing top line, but growing bottom line even faster means they're growing margins. Their assets are growing every quarter. The cash flow as well. The cash from operations, basically free cash flow is up double. These year over year growth rates are great. So yeah, there you go. If you're looking for an earthquake insurance business, that one's good with 20 to 25% net margins. Dude, these insurance companies print money. See, does Morningstar have anything to say on this one? Nope. Okay. Well, there you go. Wait. Oh, well. All right. So Gary said AMD. Yeah, we got to cover AMD, guys. AMD, why I certainly wouldn't recommend it at this price. Congrats if you're a shareholder, because I chose AMD as my semiconductor play over NVIDIA just because I think they're an easier double. If we look at the top right, they're a $410 billion company. I bought them obviously at half that because I'm up double. I bought them at $200 billion. But if I looked at NVIDIA, if you look in the top right, that's their market cap. NVIDIA's worth 4.5 trillion. So for you to double, if you buy a share of NVIDIA, for you to double your money, they legit have to be worth $9 trillion. I think the law of large numbers kind of hurts them. So that's why for my semi play, I chose AMD. Why I certainly wouldn't recommend it right now at this valuation. Congrats if you're shareholder. I'll be really quick about their numbers right here. If you didn't know, one of the reasons they gapped up so much is because OpenAI, which of course you guys know owns ChatGPT, is using AMD chips now. Is you just using AMD chips to power their LLM, and also they have a 10% stake in AMD now. So yeah, we can see here's the earnings estimates. Wow, that's actually revised higher than the last time I saw it. So revenue is going to just absolutely spike up to 9.2 bill. Big beat on the net income. So yeah, they're making net income every quarter, but the future's bright. It's just a nice semiconductor play. We can see client and gaming, data centers. We can see their market share. So certainly overvalued here, but I'm obviously biased because I'm a shareholder, but I love them. Any storage plays you like? Actually PSTG is an interesting one, but I really just like Google. It's my like Google, but Pure Storage is honestly, I guess, your pure storage play. They're at all-time highs today. Look at that. I actually used to own them, then I sold them. They're a half subscription play. Check this out, subscription service revenue. This is what you want to see in a company. I can see why this stock's at an all-time high. Check that out. Revenue's up 15 after grew 25 after grew 25. So nice growth rate. I mean, just hits a new record every year. Look at that. Every year just hits a new record. Can't turn on clear mode on live. Hey, really? On TikTok? I thought you can do that. Okay, so Blink next short squeeze stock. Hey, you know what stocks having a short squeeze is basically. Hey, someone said congrats. Hey, dude, he said congrats on FIX, dude. Yeah, our largest holding today just soared up $1,800. I can't believe it. I literally can't believe it. Year to date, we're up 78%. So that's just this portfolio, though. Our other ones aren't doing nearly as good. But another huge short squeeze stock is Powell Industries. They're at an all-time high today. And how many of the shares are being shorted? The percent, 16% of all the shares are being shorted. So maybe there's a squeeze happening on Powell too. Pretty cool. Any data center stocks you like? Yeah, hey, AMD. That's 40% of their revenue. Okay. What stock should we see here? Is this Webull? No, but I do have Webull account. Yeah, that's where I own AMD. This is like I have too many portfolios. Okay, so let's see here. Hades, what up? He said NEM. Let's see here. NEM. Is that Newmont or yeah? I think this is one of the gold plays, or is it uranium? Well, anyway, let's go figure it out. Industry. They're in gold, so this is a gold play. And these are all the gold mines that they own. Looks like they own the Nevada gold mine, some of these other ones. So I assume their numbers look great just because the price of gold is at all-time highs. Yeah, the net income is crazy. They're making 1.5 to 2 billion net income. So it's kind of just like a gold proxy. I mean, it kind of hasn't done as good as gold on like the 5-year, but it's like a gold proxy. What benefit of having multiple accounts? Well, there's no real benefit, but there's no burden of having multiple brokerages. Yeah, it's just an extra, fill it out 1099 form. You just mail out. So no big deal for me. What is this one? Yo, Tomic, what up, dude? What up? YK, what up, dude? What's your opinion on DKS? Is that Discover? Let me actually pull up that one. And then, oh, hey, remind me that. Hey, wait, hey, Accelerate. Should we look at CRMD or ENVA? Wait, no. This, Discover Financial, why did I say that? They just got bought by Capital One. So anyway, here's Dick's Sporting Goods. I'm actually surprised on how well this stock is done. Like even better than Walmart. Like this was $47 in 2019. Now it's $225. They actually just acquired Foot Locker, so they now own Foot Locker. And on top of this insane stock price appreciation, every year you've also got a dividend that grows. You get a 2% dividend and the annual yield. The annual payout ratio goes up faster than inflation. It literally was $1.25. Now it's $4.40. Insane. And what's the PE ratio? It's probably low, but the whole industry should be. They're trading at 15 times PE, which means they're trading at 15 times net income. So industry average is 20. Pretty interesting on this company. Let's go check out the net income numbers. So net income, yeah, easily 300 to 400 mil of net income a quarter. Let's go see how much the dividend costs. They're doing 3 to 400 mil a quarter. And the dividend only cost 96 million. And if you noticed, last quarter cost 99 million. How'd the cost go from 99 to 96? That's because they bought back their own shares. And when you buy back your own shares, you don't have to pay dividends to those anymore. So last quarter, when they spent 300 million on dividends, or 300 million buying back their own stock, that saved them paying an extra couple million in dividends too. Okay, so is this no? Yeah. Hey, by the way, this is a brokerage right here where you buy stocks on. Yeah. If you want to get this brokerage I'm on, it's in the link tree in my bio. Very first link there. Full disclosure, it's an affiliate link too. So if you go and like deposit $100, we'll both get like some free stocks. But let's check out VIOT. Hey, thanks again, Papa Dan 33 and Not Magic. Yo, what up, Not Magic? If you got a stock you want me to look at, let me know. Thanks for that gift there. So this is a small one. They're worth 230 million, but I see a PE ratio of 26, which implies they're net income positive. And there was some sort of good news around here. Let's go look at the numbers here. Home water solutions. Small appliances. So that's interesting. Oh, but check out this. All the revenue comes from China. So do beware. This is a Chinese company or all the revenue comes from China. Numbers. They did make net income this quarter for basically like the first time. So that's good news. But Nothing's really blowing me away here. Like they just started reporting numbers again. Like that's weird. I would just be careful with this one. Yeah, probably would stay away. But it looks like there is some positive momentum around the name. Did they do a reverse split or what was that? A special dividend of 8 cents. That's interesting. Oh well, I don't know if they should be doing a dividend. ENVA. Let's check this one out. ENVA. Hey, Remy, what up, dude? Remy, we'll check out Hut after this. Is that Hut 8? I think that's that Bitcoin company. We'll check them out after this. Yeah. Thanks again for that gift there. I appreciate that. So here's eNova stock. They're at an all-time high. So yo, congrats if you own this name. They're actually on my watch list as well. Consumer. Oh, this is that loan company. So yeah, they just had some nice growth. Check this out. Here's their small business loans. That's up 29% after it grew 38. Or no, that it's up 29 after it grew 32, after it grew 27. So that's on a streak. Also, just their main consumer loans, not businesses, but consumer loans. That's up 16 after 21. You know, in a higher rate environment, it's harder to get access to capital. So this is probably why they're doing so well. Check that out. They make great net income, 60 to 80 mil. The growth rate is insane. The net income grew 85% year over year. So very nice growth. So cash from operations as well. Like from a revenue point of view, this looks great. I just wonder. I wonder what will happen in a lower rate environment. I don't know. I wonder if there's Morningstar has anything to say. If it would load here. Okay, maybe we can't load the Morningstar research. Okay. Wait, why is it on? Okay, oh well. That they're at all-time highs. So hey, congrats if you own that one. You know, you gotta. Wait, you said they report earnings recently, or they already did. That'll be interesting. So let's look at Hut right here. Hey, thanks again for that gift there, dude. So yeah, here's Hut 8. Um, this is like a Bitcoin mining company, and I think they've recently like converted from like Bitcoin mining into like data center hosting or something. That's why they've had a lot of momentum recently, turning into like a mini core weave with all their yeah, the compute business. Let me see what they call themselves. Uh Hut 8 operates as a Bitcoin mining that focuses on mining, provides digital asset hosting, yeah, server hosting. So, um, I don't know. It's interesting, but it's kind of like I don't know. It's just nothing blows me away here. Let me see the sales here. So the revenue is 41 million. They're that what's weird is if you click on net income, it says they made 137 million in net income, but they definitely did it because the sales are only 41 million. I don't know. It's interesting. I think it's just a company with a bunch of GPUs. I don't know if they have any like I don't know if they do anything special. Just like it's like a Bitcoin proxy. All right. So Zeta stock. What up, Eric? So this is Zeta Global right here. Let's check them out. Actually, I don't remember what they do. What industry are they in? So software infrastructure. Well, let's check out their numbers because that's what matters. Oh, that's good growth. The revenue's up 35 after it grew 33. And look, 2 quarters ago, it grew 49. So they're actually seeing some nice growth. So the sales are up 35 and the net income losses narrowed by 55. So they were able to narrow their losses by at a greater rate. So that's great news. They deleveraged their balance sheet. Yeah, the liabilities used to be 62, 45. Now it's only 38. So their assets are growing, liabilities are going down. So financially, I can see why this one's done kind of well. I wonder why the stock is like flat from basically like 2024. Well, actually, that's not long ago, just 2024. Anyway, they're interesting. Yeah, I'd put them on the watch list. They're actually on my watch list. Uh, Yo, what up, S? He said DEFT. Is he ignored? No, hey, sorry. If I don't get, sorry, I try to get to all the stocks here, but there's so many. This is a DeFi technology. They're worth $700 million. Hey, look, they're 0.00. They're flat on the day. All right, let's check out what they do. Wait, is this a quantum play? The numbers here look weird, like negative revenue, 13 mil. What industry are they? Capital Solonary reserves, crypto, stablecoin. Um, The firm offers DeFi ETNs, DeFi governance, DeFi venture, DeFi treasury. So looks like some sort of crypto company. I don't know. And the numbers are like choppy. I don't know. They're worth 700 mil. I'd just be careful with this name. I don't know much about it. I probably wouldn't trust a lot of money in that one, but I don't know. Hey, what's this one here? ACN. Hey, what up, Tom? Let's do this one. Yeah, good to see you, man. ACN, is that Accutenture? So this stock makes a lot of money, I think. Is this the one that makes like 2 bill a quarter? So yeah, look at this. They're making 1 to 2 bill in net income a quarter. But notice, I think one of the reasons the stock is struggling because the net income fell 15% year over year, and that wasn't like some one-time adjustment. Like that was real. So the sales grew. Again, it's single-digit revenue growth. Like if we zoom out, there's no double-digit. Sevens. The growth's been a little better recently. But what I like is they're making like 1 to 2 billion in net income. And what they did recently is they bought a company, but that was so long ago, it's no longer in the news. Expands AWS partnership for public sector digital transformation. Senior executives, $5 million sale. Oh, well. So I just like the fact that they're making basically 2 bill in net income a quarter. And check that out. You get a 2.4% dividend. I just don't know if I really expect this one to outperform the market in the long run. Single digit growth, net income declining. I'd be careful with that. I just wouldn't put a lot in that one. Where do you get your news from? Just kind of from this app right here on this brokerage. Whenever I'm looking at a stock, I kind of just go to the news at the bottom here and read what it has to say. Amphenol acquires Rochester Sensors. CommScope CCS business sale to Amphenol approved. Dude, what I love about Amphenol is that they are a serial acquirer. They acquire so many businesses. Let me see. Do they have anything? Nope. All right. Hey, Luffy. Hey, we'll look at SMPS. Ooh, and Decker's Outdoors. Yo, Decker's Outdoors tanked. So we'll check that one out too. So here's synopsis right here. Yeah, they've done phenomenal since 2019. They've like 4x. Oh, yikes. But they've gapped down bad on earnings. Let's go see. But they've since recovered a little bit, but they went from 600 to 390. Like they fell 40%. That's actually something we'll need to figure out. Design automation. So they missed on revenue and it was a bad miss on net income. And yikes, the net income expected next quarter is supposed to go negative. That is not great, but the EBITDA is supposed to grow. But design automation. Maybe they must have had some bad guidance. That's probably what it was. Maybe bad guidance for the future because it's a high growth stock, 36 PE. Wait, is that real? No, it's not real because this quarter they made $1 billion. They didn't actually make $1 billion, but they are really making this 200 to 300 mil a quarter. They really are making that. So they're trading at like 40 times net income. Whoa. Whoa, 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 whoa. Hold on here. Look at their assets? It went from 13 bill to 48. Did they acquire a business? Here's how you can tell. Yep. You just go to the cash from investing activities. If they invested in a business or bought a business, this would be negative. And that kind of explains it. They invested $16 billion into something, and that's how their assets, spiked up so much. So maybe it's something to do with the merger. I don't know, or some acquisition. That's interesting. That is interesting. So, is the name? Yeah. Hey. By the way, yeah, this is a brokerage right here. If you want to get it, it's in the link tree in my bio. Very first link there. Brokerage called Moomoo. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get some free stocks. By the way, all the brokerages I'm using are all in the link tree in my bio. Not sure which one, but yeah. Okay, let's see here. Decker's Outdoors. So they reported earnings. They sell shoes. If you've heard of Hoka, they're like running shoes or like comfort shoes and like UGG. Well, here at actually, let's go see what the AI News has to say. Revises annual forecast. Ooh, so they lowered guidance. Court limits Decker's Outdoors design patent claims. Whoa, so that's not good, I guess. They didn't uphold the patent. So yeah, Hoka brand. Hoka is most of their sales. How's that growing? It's growing amazingly. Look at that on the annual basis. This is for fiscal year. That's what FY. So sometimes it's full year, but this is fiscal year because it's for the fiscal year 2025. I don't like when companies report it that way. But anyway, it doubled since 2024, and it has already been so growthy. So that's very interesting. And then they have UGG as well. This is the one that I guess showed some slowing growth or something. I don't know. Still good growth that year. But wait. Yeah, okay, so this hasn't updated the numbers, I don't think, or maybe it has, I don't know. But they're honestly worth looking into. I love the growth here. I love the net income, like 100. The growth rates are good. So yeah, it must have been something. Maybe yeah, it must yeah that revising guidance, that lowered guidance. Well, platform. Yeah, hey, by the way, again, this is a brokerage. If you want to get this brokerage or this the software I'm on, it's in the link tree in my bio. Very first link there. Jeff Mack, what up, dude? Great to see you. Hey, yeah, Accelerate. Remind me, we'll get to Cormedic soon. They had great results. Hey, what up, Mo? Good to see you. So here's Snapchat right here. Honestly, not a great one just because they can't get profitable. That's what scares me away from Snapchat. They just can't get profitable, even after introducing more ads, even after adding a subscription feature like years ago. Like I'm shocked they're not profitable yet. But anyway, they're the same price as they were in 2018. Is there any news around this name? Probably not. Oh well. So let's wait. Social media CEOs ordered to test of AWS. Okay, nothing news. All right, so here's a cool metric we get though. Their daily active users, they really do have a lot of users, 469 million daily active users. So that's impressive. They do have a lot of people on their app every day. And if we go down here, this is the part that's unfortunate. They're losing still a lot of money. That they've just always lost a lot of money just forever. They lose a couple hundred million a quarter. I don't know if it's from stock-based comp. I could check that because free cash flow. Yeah, free cash flow is finally positive. Look at that. They're free cash flow positive now consistently, but it must be the stock-based comp. Like they still lost 260 million, 5% worse than the previous. Like they were headed in the right direction, and it got well. It's tough. And Tencent's the largest shareholder. That's interesting. Tencent's also a big shareholder in Reddit and like Pinterest and stuff. But anywho, I'd be careful. I want to have it as a meaningful size position. Maybe a little nibble though. Maybe a nibble. So Ronnie said, "Is SoFi, or he said SoFi is a great buy." Yeah, I don't think SoFi is a great buy here. They trade at like 80. Actually, I'll just show you the numbers. And by the way, I'm a shareholder of SoFi. I want to see them do great. I'm up 4x or nearly 5x on my SoFi, but they trade at 92 times next year's net income, so it's a little expensive. But this stock, in my opinion, deserves to be doing this well. It deserves a high valuation, certainly, because they're so growthy. They're not like some of these quantum names out there, or revenue-less startups and meme stuff. Like this is a company with real growing fundamentals. Like if we go right here to their financial services, they're a fintech. They have their own banking charter. The SoFi financial services revenue's up 105%. After grew 80, after grew 223, after grew 260. Like the growth is absolutely insane. At this growth rate, what's it going to be the same time next year? So yeah, that one's growing like crazy. And they're also beating on analyst expectations. Check that out. The orange line is what the analysts expect every quarter. They beat on revenue every quarter. They beat on EPS every quarter. And on EBITDA, like analysts expected 84 mil. They reported 125. Like that's, in my opinion, what justifies the high multiple. So, like people are just taking SoFi serious. The revenue's up 42, 850 mil of revenue. Out of this 850 mil of revenue, 100 million of it was after tax net income. So I just great news on that one. So I bought SoFi and it literally crashed down. Dang, dude. Yo, man, try not to spam there. All right, we'll check this one out. DVLT. What is this one? Data Vault AI. Whoa, hey, look, they're up 50% on the day. They're worth 950 million. So very well, they're at an all-time. Well, if we zoom out, they're at an all-time low, but there is some momentum today. They're up 52%. That's interesting. They're down 10% after hours. Let's see. There must have been some sort of good news, right? Is there any intelligent comments here that can help us out? Not really. Well, there must have been some sort of good news. They have revenue, I hope at least. They do, but not much. They did $1 million of revenue this quarter, 1.7 million. At least that's a good start, though. Highest revenue ever, record revenue, but they lost 37 mil. I don't know. What are analysts expecting? Actually, check that out. Analysts are expecting the revenue to go to 6 million and then another 6. So that's, close to 30 mil of revenue a year. Market cap's 900. It's a. I don't know what the news is. Is it just momentum while they're up today? I don't know, but wait. Datavolt AI to relocate HQ to Philadelphia, expands AI, quantum centers, shares rise. So hey, something like that. I'd still be so careful. It's a micro, or it's still a very small company. But yeah, hey, 2026 is 50 million expected. Oh, nice. There you go. Where there was another stock I wanted to look at here. Where was it? Um, Oh, Oracle stock. Yo, we could look at Oracle too. Wait, hmm. Yeah, we'll look at Oracle right here. This is the big cloud play. So much of the Mag 7 market cap has come from the cloud business, like the Google Cloud, the Amazon Web Services, which is a cloud, the Microsoft Azure Cloud, like they're all huge. So here's Oracle right here. It's like a pure cloud play. 85% of the revenue is their cloud business. And basically, their 2028 projections. Let me see if I can find this one. Or no, 2020 or 2030 projections. Check this out. This is what's insane. Oracle projects 225 billion of revenue by 2030. So in the year 2030, the revenue will be 225 billion. Well, look at it right now. It's 15 billion a quarter, which is 60 billion a year. So that would be a 3 to like that's really why the stock is momentumed higher on this day because there's so much future growth that's going to happen with Oracle. They're opening up like 30 new data centers. The TikTok US data is now hosted on Oracle's servers. So, yeah, they have a big deal with OpenAI. They're ordering TPUs from Broadcom. So, expands healthcare initiatives. So, anywho, yeah, I wouldn't buy this one here, but they're certainly interesting. Oh, dude, try not to spam. Oh, Roku stock. Yo, let's look at Roku right here. So, you know who actually owns Roku? That's a big one in the Kathy Wood portfolio. If you go to Kathy Wood's portfolio, where is that? Yeah, here's Roku right here, 5% of her portfolio. Roku has a big partnership with Amazon, and there was a huge Amazon like news today. I don't know if it'll show this, but when are their earnings? October 30th. So their earnings are very soon. You know, you could buy in before earnings if you wanted to. So they basically sell you the TV. They sell the TV for break even, but then they make money on the software. Check this out. Their ARPU, which stands for average revenue per user, is legit $41. They're making $41 a user, and well, not after tax net income, but their active accounts, they have 89.8 million active accounts, up from 80 million. So went from 80 million to 89 million. That's good news. They're just now getting net income positive. Look at that. So revenue's up 15, and look at the net income. They always lose net income before today, but this quarter, for the first time ever, they actually made 10 mil in net income. So that's interesting. Here's the free cash flow. They're making over 100 mil of free cash flow a quarter, which is cool. So let's hope they can stay net income positive. Also love that they're investing in the future. They spent 90 million on something. ARK owns 5.7% of the shares, but honestly, they might be worth a small allocation. You know, I probably wouldn't have it as a huge size position, but they're certainly interesting. You know, Kathy Wood likes them. Hey, no way. Yo, shout out to my friend Cruz right here. No way. With the $1.99 super chat. Yo, Cruz, dude, I really appreciate that, my friend. He says, thoughts on JD and Baba. Yo, I don't love JD. The Chinese retailers just aren't a great business, but I love low-key Alibaba. Or that's AliExpress right here. If I had to pick, I'd much rather own BABA out of the two. I know JD is all right, though. I know they still have a nice dividend and stuff. Hey, then we'll go look at Intel and FFIV, and we'll look at CRMD, and we'll look at all these right here. So, yeah, here's Alibaba right here. Chinese, it's more business to business than Amazon. Basically, I was going to say Chinese Amazon, but check this out. Here's a cool metric. Active customers, they have a 903 mil, but I just love the net income they're making. Again, they're Chinese, but we've converted the currency from Chinese yuan to USD, and they're really making if we average it out here, they're making like 4 to 5 billion of after-tax net income a quarter, which is great. We can see, yeah, Alibaba is 56% of all the revenue. They're also getting into the cloud business. I might actually go check the news real quick. There was something I remember hearing about the cloud. Alibaba expands AI portfolio with chat assistant, smart eyewear, and browser development. Yeah, Alibaba Cloud launches Aeon system for anywho. They're also expanding. They're getting into like producing their own chips to fill the void because they can no longer buy like Nvidia chips. So they're going to make their own chips. I don't know. That's why the stock really went up so much on earnings and have been up ever since. They're certainly interesting, and they traded 20 times PE. I think they have a partnership with DeepSeek AI, which tanked Nvidia the other day. So I actually like Alibaba. I like it. And thanks again, Cruz. Yeah, happy Friday, dude. It's a super happy Friday for me because our comfort systems, like we're at a super new all-time high. Comfort systems is at a new all-time high. Powell Industries also at a new all-time high today. Amphenol is nearly at an all-time high today. I mean, just incredible. We're finally green on Ferrari stock. Heck yeah. So have you seen Intel since earnings? I actually haven't. Oh, hey, remind me to look at Open Door too. I don't love them. That just makes me wait. Have you INTL? Wait, INTL. Are you talking? Oh, this is an ETF right here. Okay, I thought he was talking about Intel, but he means this right here. INTL, it's an ETF, and basically that's just a basket of stocks. And it looks like, oh, it just owns a bunch of emerging markets ETF. Look at that. So it's basically an international exposure ETF right here. A 1% expense ratio, a little high. But there's your international exposure one. So Jimbo said FFIV. What's this one? FFIV. This is F5 Inc. I've actually not heard of this stock right here. So look at that. They're close to an all-time high, actually. So hey, congrats if you own this one. Or actually, they gapped down for some reason on this day. Is there news? No. Or actually, we can click this news right here. They report on the 27th. So in 3 days. Ooh, so if you're a shareholder of this one, be ready because in 3 days, they're going to either go up or down a bunch. They trade at 26 times net income. That's a low valuation. They're in services, software revenue, and systems revenue. That's up 39. Services are up. Ooh, so their main business only grew 1%. Yeah, if we look in the middle here, these are single digit growth rates, 1, 3, 2, 1, 3. So that might explain why the PE ratio is only a 26. But they still done great the past 5 years. Don't get me wrong. Let's check out the net income. Yeah, look at that. So why those sales might be a slow grower, or at least their main business. Let's see what the total combined sales. So total combined sales are up 12. So the sales are up by 12, but check this out. Revenue's up 12, but net income's up by 32, meaning they expanded their net margins, record net margin 24. This is great. These are great numbers. Great balance sheet, or okay balance sheet as well. Investing still in the future. Honestly, I like that one. I can see why they've done so great the past years. Bro told us about Comfort Systems. Hey, what up, Cruz? The Comfort Systems was a tough buy though. But it was you couldn't really buy this one before today, like with confidence. I expect them to go down. Like I did not expect them to go up 19%. And some people ask me, hey, are you going to take any profits on this company? Not at all. That's what. Quick tangent, like this is called our buy never sell portfolio. The reason we're doing so great, the reason we're up 78% year to date is because we haven't taken a single dime of profit before today. Like Powell Industries right here, most investors, when they're up double, maybe triple on their position, the reasonable person or average person would sell or trim their position, but not in this portfolio. I've definitely done that in other portfolios. So I take profits, I trim positions, I just trim my AMD after the rally, but actually not today. I didn't trim them. It was before today, so RIP. That's why you shouldn't trim. You know what? Exactly. I shouldn't have sold AMD at 172. What's it at today? Or 250? Or that was a small trim. Or like Robinhood, I sold 50 shares of Robinhood at 36. Well, it's 139 today. So that wasn't smart of me. Hey, Isaiah, dude, good to see you, man. Hope you're having a great Friday. This best Friday ever. So yeah. Wait. Let's see. Steven, yeah, let's do Intel. INTC, that's all good. Yeah, I actually haven't seen their earnings. They're really interesting because the U.S. government took a stake in Intel. Oh, yeah, hey, Isaiah, remind me to look at Race stock. And, so people are asking, hey, what app is this? Hey, by the way, this is a brokerage right here where you buy stocks on, or I'm not sure which app you were talking about because I was going through all these. All these are brokerages where you buy stocks on. They ask for your information. You get a tax form from any of them, no matter which one you pick. But out of all these brokerages, this one I would get right here I would recommend because it's the lowest fee brokerage. It costs nothing, no commissions, and it's the most useful one. If you want to get it, it's in the link tree in my bio, very first link there. Webull second, Robinhood's third, Moomoo's first. So anyway, let's get back to Intel right here. Intel, this is a semi play that the government took a 10% stake in, and NVIDIA took a 5% stake, and NVIDIA is now moving some of their manufacturing away from Taiwan Semi to Intel now. The government can't allow Intel to go bankrupt anymore for national security purposes. Intel reports profit. I think they were like developing a new chip, or Intel and NVIDIA announced $5 billion strategic partnership for AI and PC market. Intel secures major AI client and Microsoft partnership. Intel develops Jaguar something. Anyway, let's go look at their actual numbers. I'm not sure it'll matter too much, but actually, whoa, they had a big beat. So they beat on revenue. They actually made net income and big EBITDA. Maybe it was from an inflow from, let's see if that was real. Actually, they really did make good profits. They made like 700 mil of net income, but it says they had made 4.3 bill of net income, probably from someone giving them money. But anyway, that's that. It was a good quarter. I can see why they went up. So there's Intel. I got to reset this app right here. Dang it, Moomoo. So there we go. Okay. What up, Kudo? Is Beyond Meat undervalued right now at $2? Yo, Beyond Meat is a stock you just want to not touch. Stay away from this one. Well, dude, dang, they're down 23%. Yeah, so I wouldn't touch Beyond Meat right here. I expect them to just continue to go lower and lower. Hey, Sleepy, no way. He says, I've been watching your YouTube. Hey, thanks so much, dude. Yo, by the way, best way to support me is subscribe to my YouTube channel, watch the stream from YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. Yo, no way. No actual way, dude. Isaiah with the Mystic Drink. Thoughts on SCHD long term? We'll get to SCHD after this. Dude, I can't believe. There's another site you want me to look at Isaiah too, right? Oh, race, I think. But dude, thank you so much, Isaiah. I really do appreciate that. So here's Beyond Me right here. Here's why you just stay away from this name. If you look in the top right, the market cap, like just kind of think about this logically here. Here's why before today they were at all-time lows. The market cap, the whole company's worth 860 million. So the whole company's worth 860 million. They legit lose 30 to 50 million of net income a quarter. That's rough when you're only worth 800 mil. They lost 200 million this year, which is 25% of market cap. And they have a lot of debt. They have a lot of assets. Look at their assets compared to liabilities. They have double the liabilities as assets. How are they going to pay off all this debt whenever they lose net income a quarter? And also, they're not just losing a bunch of net income, but they lost the growth. The revenue, the lifeblood of the company, the sales, the revenue's down 19%. After it fell 9, after it fell 31, after it fell 2. So it's a tough one to trust, in my opinion. All right. So anyway, let's look at, again, shout out to Isaiah, dude. He said, with the freaking huge gift, he says, thoughts on SCHD long term. So I think long term, if you're like 10 years away from retirement or even like 5 to 7, like I actually wouldn't buy this one. If you don't need the income, there is a cool, like you buy, like let's say you own a bunch of the S&P 500 and a bunch of the QQQ. This is an interesting way to diversify away from the tech heavy S&P 500. And honestly, I love a lot of these holdings. There's some holdings I don't like and I wouldn't own. But I actually just bought a share of Abbey. It's largest holding in here. It's huge, gets my approval. I actually just bought a share of them in my Roth IRA. As one position, I plan to make it a much bigger size. But that's a stock I believe will just keep it. Not only has a good dividend, but it would keep up the growth. Same with Cisco. Now it has a good dividend, but also good growth. Amgen, Merck, Pepsi, Coca-Cola. So these are all the like sort of mid dividend yielding range. But yeah. You get a 3.8% dividend, but I don't expect this to outperform the S&P 500. One of the reasons the stock did so good back here is actually because it owns a bunch of tech-heavy stuff. Like I used to own SCHD a long time ago. I owned it when its largest holding was Broadcom. I kid you not, its largest holding was Broadcom. But this ETF doesn't let its winners win whenever the yield gets under a certain amount. So they completely sold out of Broadcom, and since then, Broadcom is up another like 2 to 3x. Like I don't. I wouldn't buy it if I was 5 to 10 years away from retirement. Yeah, hey, thanks, Jello. Hey, good Jello, good to see you. Hope you're having a good Friday. Yeah, hey, yeah, if you want to get this app, it's in the link tree in my bio, very first link there. It's a brokerage called Moomoo. Yeah, link tree in my bio, very first link there. It's a brokerage where you get stocks on. So they'll send you a tax form and stuff. Greetings from Ireland. No way. Boom. It's very nice to meet you, dude. So, hey, let's check this one out. Looney said Eli Lilly stock right here. This is another healthcare play that I love. Just like AbbVie. I love AbbVie and I love Eli Lilly as well. Because if you're wondering, these companies sell a bunch of different prescriptions. Check this out. Eli Lilly's main seller is Mounjaro right here. It just hits a new record every year, every quarter. And that's their main it grew to that way. It grew to that size. Can you buy crypto and Bitcoin? You can, Vanna. Yeah, you can buy crypto on here. So yeah, check this out. The revenue is at a new record. It's up 112, and that's just this one prescription. The revenue's up 112 after it grew 220. So insane growth there. And not just on that one, but also Zepbound. Zepbound is their weight loss prescription. It's kind of a competitor to Ozempic. It literally is up 350% to a new record. I just love how growthy they are. We go to the revenue's up 38. Not just, revenue growth, but also net income growth. The net income's up 90. They're making 4 to 5 to 6 bill a quarter. I love Eli Lilly. Real good growth. Let's see. Oh, would you buy that over Novo Nordisk? I actually would. So Novo Nordisk, this is another reason Novo Nordisk is struggling so much is because of Zepbound right now. Also, another reason, if you look at Novo Nordisk right here, if you look at their valuation, they trade at 13 times PE. The industry average is 23. That's because they lose their exclusivity for Ozempic in a couple years. So they'll no longer have that patent. Anyone can use it. And if we go to the net income right here, this is the thing. For right now, the business is doing amazing. Like they're easily making 4 to 4.3 bill of net income a quarter. And this growth rate, what's it going to be this time next year? But it's the future growth that's uncertain, and that's why they send this PE down. Literally 93% of the revenue is through obesity care and diabetes care products, which is Ozempic and Wegovy. Elon Musk is on Ozempic, but I think they might be fully priced in. I'd probably nibble on them. Can you trade on Moomoo? Yeah, of course. Yeah, I got a bunch of, let's see. Thoughts on GEV? I really wish I grabbed the dip, but shares. Yeah, GEV is like the most, one of them super expensive names. But they are good quality. So let's check out their numbers right here. Power, wind, electrification, 42%. I actually thought it was more than that. 42% of the revenue is from the US. Let's see what the EBITDA estimates are. Oh, wow. Next quarter is supposed to be $1 billion. It had slightly missed this quarter. They beat on revenue, missed on. So anyway, next quarter should look interesting. Yeah, the net income is a nice couple $100 million every quarter. All right, well, that's interesting. Sales. I like CEG. So I wonder, actually, let me pull up GEV versus CEG. Let me see how similar these two stocks move, because they don't move too similarly, but I'm sure they somewhat. Yeah, look, GE Veranova has performed a lot better since its IPO because it was so underpriced. But yeah, they're interesting. Which app is this? Yeah, hey, by the way, yeah, this is a brokerage again. All these brokerages I'm using are all in the link tree in my bio. It's where you buy stocks on. If you want to get, it's in the link tree in my bio. Very first link there for this one. Hey, what up, Zero? He says thoughts on AVAV. That's Aero Environment. I actually like this name a lot. Hey, then we'll look at SEHD is good for income and balance. Yeah, diversifies you away from the tech-heavy S&P. So here's Aero Environment right here. They are worth $19 billion. There's been a lot of momentum, around this name lately, and I think it's justified. I certainly wouldn't buy it here, but here's what's kind of so cool. If we go to their autonomous systems revenue right here, it's hard to see the comp numbers, but yeah, that's 62% of the revenue. Space cyber is their other half of the business, but check out the growth expectations. The revenue is going to go from 160 to 504 mil. Like the growth expected this next year is going to be insane. It was 450 mil this quarter. This was an absolute banger of a quarter. 450 mil of revenue. They lost money this quarter, but did they buy a company? Yeah, so that's what happened there. That's how their assets jumped up so much. So they spent basically $1 billion buying an asset. And that also explains why the revenue spiked up so much, because they actually acquired a company. So that's interesting. That is interesting. All right. Braden said honest company. Yo, to be honest with you, I just don't love them for the slow growth here. So if we look at the honest company, or we just go to their numbers right here, this is the part that I don't love. Like, revenue is only up 0.44% year over year. So the revenue is only up 0.44. Not too impressive. They did get net income positive these 2 quarters, which is good, especially because they're only worth 400 mil. But I kind of just want to see more growth with the honest company. And again, they just sell a commodity, diapers, wipes. That's like 60% of the sales. I think it's just nothing that's like, I don't really expect them to outperform the S&P 500. DUOL. They just sell literally like, it's like healthy diapers and wipes, or like, well, what's their proposal? It's something like that. It's supposed to be like chemical-free diapers, or something like that. I forget, but hey, Isaiah, dude, with another heart. No way. BYRN. Hey, remind me to look at BYRN. We got to get to that one for sure. I want to get to Duolingo first, and we'll look at Plug. I don't know if we'll look at Plug Power. I don't love that one, but Okta's interesting. So here's Duolingo. It's like that language learning app, if anyone's heard of that before. You like learn the English and other languages. So check this out. Their subscription revenue this is a subscription business, because 83% of the revenue comes from this. And check out the growth here. This is why I have Duolingo on my watch list. I love these numbers here. The sales are up 46 after it grew 51, after it grew 45. Like, they're on a streak of growth. Like, every quarter, there's no red. There is no red. They've just been growing for all of time. And if you don't pay for their subscription, you see a bunch of ads on their site or app, and the advertising revenue grew 55% year over year. So I like the growth on Duolingo. Here's the orange number. This is what the analysts are expecting. It's just expected to keep on going higher. And they beat every quarter on revenue. They beat like crazy on net income. They beat like crazy on EBITDA. They're making net income every quarter. Insane growth rate. The free cash flow is insane. The growth rate, like, everything here is headed in the right direction. They deleveraged their balance sheet. Like, I like Duolingo, but the AI thesis is hurting them. I heard ChatGPT or OpenAI created a language learning app competitor. Google's coming out with one. So there's always, I like them for their numbers. All right. Hey, thanks again, Isaiah. BYRN. So let's look at FINRA Technology. This is another small one. They're only worth $470 million. Let's check them out. So $470 million market cap name. All their revenue comes from the US. What's the actual industry? Aerospace and defense. Whoa. Which engages innovative personal security solutions. Well, actually, I can click on the website that's linked right here. Maybe we can see. Oh, okay. Good thing I didn't click that. Hey, okay. Or good thing it just froze on TikTok, because I cannot show that image. Yeah, so they sell just something I can't talk about. Uh-oh, okay. Let me fix this. There we go. Okay. But the revenue does look interesting. Check this out. The revenue grew 35% year over year. So the revenue's up 35, and they're making net income. That's actually the best part. They're actually making net income every quarter. They have a great balance sheet as well. Look at that. So actually, they sell pew-pews. Yep. So if you're looking, I like this one better than Smith & Wesson. SWBI is a much worse buy, because their numbers way more cyclical. Like, these numbers are great. This is a great balance sheet. So if I want exposure to that industry, that actually looks like they're actually on my watch list. They're actually a way better buy, in my opinion, than they do the same thing as this company at the top does. And if my stream just gets taken down out of nowhere and goes blank, then uh-oh. It's because we were talking about this. Okay, let's change the subject here. Hey, Boom said UBNT. UBNT. I respect the work you're doing. Keep it up. Hey, thanks so much, Nico. I really do appreciate that. So wait, UBNT. I typed that one in. Unfortunately, boom, I can't find that ticker. Or I type in the ticker symbol and I can't find that stock there. So, so look, oh yeah, hey, what up, Jimbo? Yeah, Deckers Outdoors. They just reported earnings. So basically, they showed UGG sales growth slowed, something like that. If you're wondering, this is the shoe company that owns Hoka, and they also own UGG. And it looks like this, it hasn't updated on these numbers yet, but it looks like the growth on UGG showed slower growth. Oh, and I remember we were looking at the news down here. They lowered their revenue target amid tariff challenges. So makes sense. You know, Nike, Lululemon are seeing the same kind of issues there. But check out the Hoka brand, for example. This has been so growthy for the full fiscal year 2025. I mean, just every year hits a new record. So ever since Nike took out their removed their relationships from like Foot Locker and stuff, they took their place. So, oh, hey, what up, Paul? I said race stock. Yeah, Ferrari right here. So, Ferrari, this one I bought on the dip because they're a good company, in my opinion. And we're finally basically break even on our shares. I just like these numbers. They're easily making 400 to 500 mil in net income a quarter. We can see the net income is up by 12.8. So, the net income's up by 12 and the net income per share is up by over 14 because the share part of the ratio went down. So they're buying back their own shares and they raise their dividend every year. You get a basically 1% dividend, 1% to 2% share buybacks. They make good net income. I just like them for their numbers and the industry. Ferrari is launching an EV. Yeah, they actually lowered their EV target plans for 2030. That's ooh, oh, wait, here's another. Wait, hey, Noah said WTI. Then we'll pull up on stock. I think that's another shoe company. So unfortunately, this stock has not done too well. Probably because they're an oil and gas company. Yeah, look at that. They're basically at an all-time low, lower than they were in 2005. So let's see. They must have a high yield. Not even, the dividend got cut. 1% dividend yield. They have sales, revenue. So the revenue is down 15% year over year. That's just because the price of oil, but still not great. Yeah, they have a lot. They're leveraged. They have more liabilities than they have assets, and they're losing net income every quarter. Honestly, I would stay away from this one if I wanted exposure to oil and gas. And that I would actually pick MUSA, Murphy USA. That's my favorite oil and gas play. I think it's a better buy than Exxon and Chevron, just because of the lower yield. I need to sell my OLIN. Oh, maybe we'll check that one out. So let me look. I wanted to see what On is again. On Holding. What are the brands that they own? They own, shoes. Okay, but what brand? Forget. Yeah, it's not gonna, dude. It's really not gonna tell me, bro. I I don't know what. Okay, so all right, they sell shoes. So shoes are 95% of their revenue. Let's see how they're growing. Again, they're probably taking market share just like Hoka is. What apps do you use? Yeah, hey, by the way, this brokerage, this is where you buy stocks on. This app I'm on, if you want to get it, it's in the link tree in my bio, the first link there. Yeah, check this out. The sales are growing nicely. The sales grew 32% year over year, but the net income, was that real? No, so there was some one-time adjustment or something. They didn't actually lose 40 million net income. They actually made a record net income that quarter. And they had a big beat. Yeah, they beat on revenue. They, again, one-time adjustment to the EPS, and the EBITDA beat like crazy too. So anyway, they're interesting. Another shoe play. Yeah, they sell a commodity, but the growth has been very nice. Hey, Carlos said AMX. Let's check this one out. Wait, AMX. I have not heard of that company before. America Mobile's something right here. Let's go. Well, unfortunately, this stock is the same price it was in 2007. So you bought the stock in 2007. It's the same price that it was today, but it has had a nice rally the past couple months here. Let's go see if we can figure out what they do. They're in telecom services. Let's see here. Revenue. Oh, so check this out. They're not really in the US. 31% of the revenue is Mexico, 20% Brazil, 12% Telmex, Europe, Colombia. So it's an international telecom play. Let's see, net income. Oh, hold on, we got to convert the currency to USD right here. Yeah, they made 1.33 billion of net income this quarter. Was that? Yeah, that's real. They're making good net income the past 3 quarters. That's probably why they've recovered so much. Because if we scroll back to the previous year of net income, yeah, they were struggling back here. Hey, hey, Isaiah, heck yeah. Thoughts on DAL for midterm, Delta Airlines? I don't need, I just don't, I just don't love the airlines. Like, I think it's just like worth completely staying away from. Uh, like, like over the next 3 to 5 years, that's still a long time. Like, I'd rather pick like an AI play. Yo, my Wi-Fi is tweaking right here. If this doesn't connect, I might have to end the stream, but I can maybe grab my other phone. Um, uh, Dude, this thing's really giving me a hard time right now. This happened last time too. It's this phone. Okay, let's see here. I'll go grab my other one. Let me see here. Oh, jeez. All right. This will work. This will work, actually. We're good. We're good. We're good. Stop mirroring. Yes. All right. Perfect. All right. There we go. All right. We'll just do it on this phone then if it wants to give me an issue. Yeah, look at that, dude. Comfort Systems was up 18. What was my watch? Yeah, Comfort Systems was up 19. AMD. Powell Industries was up 7. Constellation Energy 7 nearly. It was crazy. What website is that so I can check it out? Well, I think you're talking about, yeah, this is, by the way, all these apps, all these brokerages are all in the link tree in my bio. Out of all them, this one's my favorite. Very first link in the link tree in my bio. Oh, it's called Moomoo. Yo, dude, Isaiah, thanks again for the meerkat, whatever that is. Heck yeah, man. So Delta Airlines, let's check them out. So I will say, out of all the airlines out there, this is like the most well-run airline. I don't love American Airlines. I should check out Southwest as well, but yeah, let's check out, like, here's what I like about this one is the net income is finally consistently profitable. Like, they're making a good, they're net income positive every quarter. If we look at all the other airlines, they're all like choppy. Like, sometimes they lose a bunch of net income, then they make some, but then they lose some. So, but this one actually has consistently good net income, at least for the past 2 years. So, that's what I like about Delta Airlines the most. And I think, yeah, they brought back their dividend. I think you get a 1%. Yeah, they brought back their dividend, so you get a 1% yield. But yeah, they kind of get smoked in a recession. I'd just be careful. They sell on cloud shoes. Oh, wait, did we already look at AMX right there? Ring Energy. Hey, Johnny, if you give me the ticker symbol, we'll check that stock out. I don't know what that is actually. I don't know what that is. AMX. Oh, wait, that was that other company. SAIC. What is SAIC? This is Science Applications International. Yo, my Wi-Fi is really giving me a tough time today. I apologize. Yo, if y'all want to hit the follow button, by the way, we stream every single day, sometimes twice a day. Yo, I'm actually going to do a late night stream tonight. So I'm actually in the stream in a little bit, but we're going to be doing a late night live stream in a couple hours from now, probably. So here's Science Application International. By the way, I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you, DM you, nothing like that. Defense and intelligence. I like this industry. Let's see. Yeah, so the sales are actually down by 3% year over year. So sales are down by 3. That might explain why the stock is doing so bad. It's the same price that it was in 2020. So not good. And they missed on expectations. Yikes. Analysts were expecting 1.86. They only reported 1.76. But they are still making net income every quarter, but the growth is kind of gone. The growth is negative, actually. It's already was low single digits. Now it's negative. So that explains why the stock is struggling so much. We just want to see the growth come back to that company. What time? I don't know. Probably in like 4 hours, probably 3 to 4 hours from now, we'll be streaming. Check out PM. Yeah, hey, this is your dividend play. They've done better than MO stock, if you've heard of them. I think they used to be owned by MO and then they spun it off. Or maybe, yeah, this one was spun off, I think, from MO, or maybe it's the other way around. But anyway, you get a nice yield here. They're the people that own Zen, or I don't even know if I can say that, but that's what's led to a lot of growth on this business right here. That's up 15 after it grew 14. So they're on a nice little streak of growth on their free business up here. And look at the yield. This is what a lot of people like about the stock is they have a sustainable 3.5% dividend yield. So not too shabby. PE ratios of 28. So look, if we go to their net income right here, it says this is why the payout ratio, it says 117. It's not actually 117. If we look at their net income, this was a one-time adjustment from an acquisition. It says the net income this quarter, every other quarter it's 2 to 3 billion, but this quarter went negative 500 million. Again, that wasn't real. You can tell from the operating profit, they didn't actually lose that money. So that's what's interesting about them. The very sustainable yield and the growth is kind of coming back with that name. So very interesting. All right. REI stock. Oh, wait, let's check out this one. Or wait, REL or REI? Ring Energy. So, they're worth $200 million. So, extremely tiny market cap, and they're at an all-time low. Let's see, do they have sales though? They do, but the sales are down bad. The sales are down 16% year over year. So the growth is kind of gone. That's unfortunate. The sales are down 16, but they are actually, this is good news. They are still making money every quarter. So they're not going bankrupt, but that's not good. Sales are down 16, but they still made 20 mil of net income, and they really did. They really did make 20 mil. They have a dividend? No dividend. Actually, I like that they don't pay a dividend, but yeah. They're only worth 200 million, but they're making they made 20 million this quarter. That's 10% of their market cap. Actually, it probably was a little less than that, but they might be worth a super, super small amount of money. I mean, I wouldn't trust anything meaningful, no amount of meaningful money in them, but they're certainly interesting. VARS says NBIS. Yeah, hey, Nebius stock. You know who actually owns Nebius? That would be NVIDIA. So if we go to the NVIDIA portfolio right here, they own CoreWeave, APLD, but 3.5% of their portfolio is in Nebius. The stock just recently got a huge deal from Microsoft, and I think they had a little thing with Uber. Yeah, Uber and Nebius invest $375 million into autonomous driving company AV Ride, which plans to do in Dallas some robot delivery Uber Eats thing. So that's pretty cool. It'll be on the Uber Eats platform. But check this out. Even before today, before this, also the $17 billion Microsoft deal, they're already really growthy. Revenue went from 14 mil to 100 mil. That's insane. 100 mil. And analysts are expecting 265 mil in 2 quarters. Insane growth. What app is it? Hey, by the way, this is a brokerage. It's where you get stocks on. They ask you for a bunch of information. But if you want to get it, it's in the link tree in my bio, very first link there. Full disclosure, it is an affiliate link. So if you go into deposit $100, we'll both get some free stocks. But I love this one the most. I got all these brokerages here. But by the way, all these brokerages are linked up there. But I like that one the most because it's the lowest fee brokers. On Robinhood, they make you pay $5 a month to get the 3.75% APY. This one, there is no fees. It's free. Anyway, IREN. So that's Iris Energy. They're like the smaller version of CoreWeave, and their numbers are so growthy. I kid you not. You're going to love this right here. Check this out. If we go to Iris Energy, I wouldn't buy the stock today at this price, but here's what kind of justifies a lot of this, insane momentum. I mean, the revenue went from 50 mil to 180 million, and over 3x increase. Yeah, Mr. Sebastian, is this one I'm on right now? It's the very first link in the link tree in my bio. It's called Moomoo. But yeah, the revenue is up 229% year over year, and they didn't just grow the revenue. The top line grew, or the top line 3x'd, but they also made of after-tax net income legit 95 mil, 25 mil last quarter, 18 mil last quarter, while growing their assets. So I like Iris Energy, but and analysts are expecting the revenue to go to 260. It's insane, but probably wouldn't buy them at this price, but I can see why the momentum's so crazy. Yo, Isaiah with the meerkat. Yo, if you got another stock you want to look at, let me know, Isaiah. Thanks again, dude, for the gifts there. I really do appreciate that. Yeah, Nebius was insane. Yeah, Nebius is a good chunk of NVIDIA's portfolio. All right. I see you got Comfort Systems, so I've got my answer. Yo, what up, dude? Yeah, dude, Comfort Systems was nuts today. Up 19% to an all-time high. We bought them during the April dip. That one went crazy. Can you check out crypto as well? Might have a really good one. Yeah, we don't really look at crypto because there's nothing to really look at except the chart there. RSG, is that Republic Services? Yo, this is like they have a shared basically oligopoly with Waste Management. Yeah, Republic Services, a great company. Wait, yo, is this the stock? I'm gonna actually I'm gonna re-add them to the top of the watch list. They're in the trash business, recycling and waste business, recycling, environmental solutions. So how are they growing? You give it again, probably single digit. Yeah, look at this. So sales are up 4, 5, 6. So single digit growth. But the net income is just consistent. Like it's an industry that's going nowhere. It's not going to be really taken over by AI. I mean, they're making 4 to 500 mil in net income a quarter. Waste management's another great one. Basically, the competitor to waste management. And not only that, you get the growing dividend, a 1% plus yield. They raise it every year with inflation. A good stock to never sell. All right, so let's see here. Is TTD undervalued? Well, let's check this one out right here. So, all right. TTD, this is one of the stocks that fell basically from a new Amazon launch. So one of the things that is, they fell 4% instantly on that news. Yeah, that's why they fell right at this second here. And that's why the volume, but they're seeing a lot of increased competition from their Amazon and Amazon's Roku thing. Amazon testing it got leaked or something. Yeah, report on leaked slides. So anyway, creating a direct competition for the trade desk, another TV ad thing. Like for example, Netflix used to use the trade desk to find their advertisers, but Netflix recently dropped the trade desk, and Netflix now uses Amazon. But I still like their numbers. This is why I'd put the trade desk on the watch list, but I wouldn't buy them yet because they are losing their margins a bit. Like the sales are nice. The sales are up 18. So revenue's up 18, but the net income is only up by 6%. So the net margin actually fell by 11, but I'd still put them on the watch just because they're still making good money, like 100 mil a quarter, but it's the future growth I'm kind of worried about. And on top of that, this is another thing. They still, even after the dip, they still trade at 62 times net income, and the industry average was 45. If they traded it like 40 times net income, it'd be more reasonable here. But 62 is still really expensive for yeah. The risk reward still isn't great yet, so I'd hold on. Yeah, I wouldn't sell Comfort Systems anytime soon. My company is dude. Comfort Systems. That's the thing. So people are asking me, like, are you going to take any profit? I'm not taking any profit on them. Yeah, Amphenol is another great one that I own in here. People are calling Amphenol like the nervous system of AI, like supplying the copper cables for NVIDIA. They're a serial acquirer. They just acquired like Textron and some other names, which is pretty cool. And CommScope. Yeah, they're acquiring CommScope's cable business for $10 billion. Saved them from bankruptcy. So. You know what? Yeah, Tommy, let's look at Amphenol Group. You know what? Let's cover them real quick. They reported phenomenal earnings. They're trading at 44 times net income. The PE ratio before today was it was like 50. It was 49, and now it's only 44 because the net income grew so much. So even though the stock rose, the stock is at a new all-time high. The PE ratio fell because of how much the net income grew. So check this out. If we look at the sales, the revenue grew 53. That's insane. So the revenue's up 53. But the net income is up by 106. That means they grew their net margin. The record net margin has never been above 20% before. So an incredible quarter. They deserve to be at all-time highs. What about the free cash? I haven't looked at that. 1.21 billion of free cash flow. I just love their numbers. They're beating on every expectation by a huge margin. This is what explains the stock being at all-time highs. Like, this is another company. I'm not selling them because they deserve to be at all-time highs. These are the kind of stocks, Comfort Systems, Amphenol, all the Powell Industries, even though they're at all-time highs, in my opinion, they're going to continue to keep on climbing up higher. So, yeah. What is this one here? Hey, good afternoon. What do you think of AMC earnings next week? Hey, I got a lot. Yo, this is kind of just a meme play, man. No real fundamentals. Actually, hey, when I signed up for this app, they gave me a free share. And one of them was AMC, and I sold it at 37. Hey, by the way, if you want to get a free share, you can get this app with the link to in my bio. First link there. We'll both get like a little free stock. With my affiliate link if you want to get the brokerage. But anyway, AMC, first link in the link tree in my bio. AMC, though, not one you're really buying. Like you're not buying AMC because of their great business model. You're really just hoping Roaring Kitty tweets something because they just kind of burn through net income. If we go to their net income number, like they're leveraged, they have a lot of debt to pay, a lot of liabilities, and they're losing net income every quarter. So how do you pay off debt when you lose net income? It's a momentum play. I wouldn't like this isn't sadly, like this isn't the stock you just buy and never sell. You don't just buy and hold this one. I'd be careful. So yeah. Is APH a good stock for the long term? Absolutely. Absolutely. And that's why they're in my never sell portfolio, because I'm never selling Amphenol. They're such a beast of a company. So someone said go in Beyond Meat. That's another one I wouldn't touch. Financials explain everything. Financials explain why Beyond Meat's at all-time low and Comfort Systems at all-time highs. So here's why Beyond Meat's at all-time lows. Here's why I still would avoid this one. Again, I'm not opposed to someone like, hey, there's a lot of volatility right now. I'm going to do some sort of short-term swing trade option. Like, do that, but don't buy and hold this one, because I think this one in the long term is just going to keep on going lower. Like, if you go to the net income, like this is what's tough. They lost 200 mil of net income this year. They have a lot of double the liabilities as they have assets. How are they going to pay that off when they lose net income every quarter? And look at the sales, the lifeblood of the company, the revenue. The revenue's down 19 after it fell 9. After it fell 31, after it fell 2, like they're on America's kind of said no to plant-based meat. So I would just not buy that one. Oh my goodness, dude, I didn't even see that. Shout out to 11 Scowl, dude, with the $20 super chat. I never would have bought food too without watching you. Yo, I'm so glad you own that one. I think this is like the cheaper version of Robinhood. Weren't they up? Yeah, they were up 5% on the day. I can't wait, dude. By the way, if y'all want to hit the follow button, we'll be streaming every day, like for eternity. I can't wait to see their next special dividend. The PE ratio is a 20 on this name. You know what? Let's go over Futu stock right here. Dude, thanks again. If you're interested in like, if you like Robinhood stock, if you like SoFi, if you like Dave, Futu is like an amazing one. So Webull stock is publicly traded, BULL. Robinhood stock is publicly traded, ticker symbol HOOD. And then remember this whole stream, we've been using this app right here, this brokerage I'm on is also publicly traded, ticker symbol FUTU. Here's why I like this stock a lot more than like Robinhood. And I also own Robinhood, but I think they're a better buy. Check this out, super growthy. We look at the revenue. The revenue's up 69 after it grew 26, but the revenue's up 69 and the net income's up 111. And you won't believe the margin on that. The net margin was legit a 48, up from 38. That just adds money to the bottom line. So the net margin was a 48%. They beat like crazy on the metrics this quarter. Brokerages make a lot of money from commissions. So brokerage commissions, that's half their revenue. Their user base is growing. Let's see. Their users are 27 million, up from 23 million. Their client assets. So, this brokerage I'm on, I keep a lot of my stocks in here. Even if this brokerage goes bankrupt, you're still FDIC insured for $250K. But it's good to see that this brokerage I trust my stocks in, is printing money, made $330 million. And, they're also getting into, about 6 months ago, you could buy crypto on here. So that just goes under their other income. It's booming. Like, I just love this stock. And they only traded 24 times PE. So that's FUTU. So yeah, and again, if you want to get this brokerage, this Moomoo or this app I'm on right now, it's in the link tree in my bio, first link there. And if you want to buy the stock, it's FUTU, pretty cool. So I lost 2K yesterday. What's your biggest loss? Yo, my biggest loss was like a couple grand. I think 3K in ChargePoint stock right here, CHPT. Now this one, look at the stock. It's at an all-time low right now. I'm so glad I sold the stock when I did. Check this out. There's the sell order. So look, I sold all my shares on this day right here. How many shares was it? 66 shares. I had sold 66 shares on that candle. And guess where I bought it? Yo, this is going to be crazy. We were buying our shares. There's our buy orders. Yo, we were buying this stock way up here. So it was a major, major L. And this is the stock that really, and hey, Lexi, dude, thanks again for all those roses or the cats. I appreciate that. Yeah, we'll look at Target after this. But yeah, this is the stock taking a loss actually taught me what stocks not to buy. Like when I bought, I swear, I bought ChargePoint. I never even looked at their numbers. I never looked at net income or anything. I didn't realize this company legit was losing 100 million of net income a quarter. And just for all of eternity, all they've just done is just lost money. They're still losing. So they lost 66 million just this quarter. They lost 66 million just this quarter. And if you look in the top right, the whole company's worth 256. So that's a huge chunk of their market cap. And they're not even growing. The sales are down 9 after they fell 28. Anyway, glad I took the loss on them, but I have some other stocks that I deem too cheap to take the loss on. Like I'm not taking the loss on UiPath or Zoom or Sprouts Farm. Or I wouldn't. These are, I think, still great to hold on to. Okay, so dude, thanks again to Lexi6. Dude, thanks again for those gifts there. Yeah, EV stocks kind of hurt. Yeah, that was an EV charging company. Yeah, I need to trade Hood. Yo. So what do you think of Target? Honestly, I don't love this name. I besides the dividend you get, like you get a great dividend that's super safe. If we go to the dividend right here, you get a 4.75% dividend. But I don't know if I still expect this company to outperform the S&P 500 even after its huge decline. Like it's a low margin industry that's they're kind of being out innovated by Amazon and Walmart. Like anything you can get on Target, you can probably get on Amazon, and Amazon actually delivers it to you. Walmart delivers it to you. I don't know if Target does that. Like it's a low 3-4% net margin business. The margins fell 20%, and they lost the growth. If we look at the sales are down 1. Again, it's kind of all priced in at this point. Like that's the reason they're this low. But the revenue's down 1. The net income is down 21. But check, here's how they save the dividend. They're still making 800 mil to $1 billion a quarter. So remember, they made $1 billion this quarter, and the dividend only cost 509 million. So they actually, can really afford the dividend. But I think it's just a tough buy. I mean, one of the reasons Target is being hurt so much more than like your Walmart or Costco is they sell more discretionary items, like less than just groceries. They sell you're buying more discretionary stuff at Target. Like, look, food and beverage is only 22. Then, household essentials, your apparel, accessories, home furniture, hard lines, beauty products. So I don't expect, but they have a safe yield. Target has Target Circle 360 cut a bunch of jobs recently. Oh, hey, maybe that could help at the bottom line there. Yeah, hey Kudo, that's the I'm talking about valuation wise. Yeah, BULL. Yeah, the stock price is irrelevant when it comes to valuation. Do you think Pinterest is a good buy? I don't know. They're an all right one. I used to own Yelp. Yo, Jonathan. Yo, hey, Jonathan. Dude, thanks for the gift. Yeah, well, look at ISRG too, dude. They jumped on their huge robotics division. Hey, Jace, dude, remind me to look at STX as well. Good to see you, Jace. Happy Friday, everyone. Yeah, hey, we'll look at ISRG after this. So here's Cameco. This is actually my favorite uranium play out there. I've looked at all the uranium stocks, and honestly, this one's my favorite one by far. Unfortunately, they're really expensive. They're at an all-time high today, but this is if there's a dip in uranium prices or whatever, like this is the one you eventually want to get into, just because they're the most quality. They're making great money. They're actually making net income every quarter. They have a dividend too that they can raise. So I like them the most. They're actually the largest. If we go to the URA ETF, the Global X Uranium ETF, this ETF, it kind of looks just like CCO stock because literally the largest holding, if you buy this URA ETF, you put $100 in it, $20 of that money just goes to Cameco, that stock. So I love them as best nuclear individual plays. So let's look at ISRG right here. Yeah, they jumped on some like good robotics division news. Check this out. Huge gap up. So congrats if you own this name. I love this stock right here. Now, I wouldn't buy it probably here because they traded 72 times net income, but they deserve this high valuation in my opinion. Check this out. We can see their instruments and accessories. That's up 20% year over year. So their revenue is up 20. They sell these, medical devices like those screeners, and they also service those machines. So we look at the services revenue. That's up 20% year over year as well. So all their businesses are growing. Systems revenues up 32. So really growthy, and they just beat on every metric. Like the orange line is what the analysts expect. Huge beat on revenue, huge beat on net income, huge beat on EBITDA. Like that's insane, these beats. Like here's the net income, easily 700 mil a quarter, fortress balance sheet, literally no debt at all. Oh, hey, sorry, gotta mute this guy. Hold on there. Try not to spam there. But yeah, I love this. They literally have $5 billion of cash and no debt. And that $5 billion of cash literally made them 95 million of interest. Like that's what's so cool about the high interest rate environment. In these cash rich companies, they can milk they can milk the high rates by putting their money in these 1 to 3 week treasuries. That's the same thing that Powell Industries is doing. Comfort System, like all these names. Let's see here. Speaks, what up, dude? NAKA stock. I haven't actually looked at this stock yet. Yikes, they're at like an all-time low. Is this the stock you're talking about? Let's see, do they have sales at least? So I can kind of see why this stock is at all-time lows right now. I mean, revenue of 400,000, the revenue's down 36, and they're losing. I'd be careful with that one. Yeah, we won't really cover that one. Where do you summarize your current favorite names? I haven't really done that. Actually, probably my YouTube videos. Like here's my hidden gem watches. These are all stocks. Like I want to own a lot of these names. Some of them I already own, but like Waste Management, John Deere, Rollins. This is that termite pest control company that just has the largest market. I don't get how I can never get this one at a good valuation. They're great. Uber is great. ARM, they're a royalty play. BlackRock Asset Manager. AbbVie the beast. Axon, these are all good. I love all. They're not at good valuations right now. That's why they're on the watch list. These are names I eventually want to get exposure to, but can't now. All right, so let's see here. I owned Palantir when it was under $20, sold it at 30. My biggest regret. Yo, we all have that. We all have those big regrets where a lot of people's biggest regrets are selling out of high quality stocks for a big profit. Like look at this Robinhood, for example. I sold 50 shares at $36. That was my biggest regret. I sold 50 shares at $36 for a 3x gain, but now it's at 139. So I would have made so much more. I'm up over 10x on Robinhood now. So I feel you on that one. Actually, I sold out of Palantir as well. What is APH annual percent? What do you mean there, Tommy? Like how much they go up every year? It's a lot. What do you think of UPS? I think UPS is you don't really want to buy that one. STX right here. So yeah, UPS needs to cut their dividend. They couldn't afford their dividend the past 2 quarters. They've made no money. The growth has gone on. Maybe we'll cover UPS after this. I wouldn't buy them. But here's STX, Seagate Technology. You know, they're getting huge investments from like SoftBank. Let me actually go to shareholders. Are they a shareholder? Okay, no. But let's see. Revenue. Let's see. Revenue's up 29% year over year. That's good. What are they expecting? Yeah, revenue's going to go from 530 to 750. So they're going to see even more. Oh, that's EBITDA. Revenue's going to go from 2.3 to 2.66. That's good. Sales are up 29 and they're net income positive. So they're already making net income easily 3 to 4 to 500 mil of net income every single quarter. So, let's see, market. So 48% of the revenue comes from US, 41% is Singapore. So yeah. All right. You should get an X account and post. Yeah, hey, maybe I'll make an X account. Yeah, by the way, I'll say that. By the way, this this is my only account. I only have this one TikTok account. The only other thing I have is a YouTube channel. So I only have a YouTube and TikTok. Watch out for people impersonating me. Just know I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp. I sell nothing. But I do. Matt, what app is this? Yeah, by the way, this is a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Yeah. It's an affiliate link too, full disclosure. So if you go and deposit $100, I'll both get some free stocks. All the brokerages I'm using are all in the link tree in my bio. So this one though right here is my favorite one just because of all the cool analysis features and the fact that it's free, no fees, no commissions when you buy a stock or anything. So that's my favorite one. All right. So yeah, link tree in bio, first link there. Let's see here. Let's look at UPS. Here's the thing. Here's what I'll warn about UPS. Here's why I don't love them. If you look at the dividend right here, here's why a lot of people like this stock. They see, a 7.5% dividend, not too shabby. 7.5% yield, but here's the thing. If we go to their average daily parcel volume's down 6% year over year. But if we just go to their total revenue, the sales, the lifeblood, it's down 3%. So the revenue's down 3%. And the net income is down by 9, but you're still like, hey, they still made 1.28. They made 1.2 bill of net income. They actually didn't. They actually lost net income this quarter because of their dividend. So remember this, they made 1.28 billion in net income. We go look at the cost of the dividend every quarter. The dividend cost 1.35 billion. So they literally couldn't afford the dividend this quarter or last quarter. So that's why I think this company needs a healthy dividend cut and the business just isn't growing. So I can totally see why this stock has done so bad. Probably will continue to go lower if they don't do a dividend. I think a dividend cut will be seen as good. Okay, what is Games Worker? I don't know what that is, user. If you got a stock you want me to look at, give me the ticker symbol and we'll check it out. From what time frame, Tommy? I just know Amphenol's. I don't know how to answer that without more context. Yeah, they're just a beast. Definitely outperform the S&P by far. Ooh, let's look at CRMD. So yes, Core Medics right here. That's actually what I own on my Roth IRA. So if we go over here back to our Robinhood portfolio, scroll down here. Yeah, we got 43 shares of Core Medics. We're down 6% on this company, but here's why I like this stock. And I normally don't recommend these kind of stocks. And as much as I love this stock and as much as I recommend them, again, I don't recommend anything, not financial advice. Like, you cannot make them as a meaningful size position. Like, I have $400 in this company. Please don't make this a meaningful size position, like super small company. Because if you look in the top right, the market cap is $870 million. Here's what I love though. They're worth $870 million. And they legit have $190 million in cash. So they have $190 million in cash with no debt. So a huge chunk of their market cap is just their cash on hand. And they legit make 20 mil of net income a quarter. So $800 million company with $200 million of cash that's making interest. The sales are really growthy. They're making 20 mil of net income a quarter. So look, they made 19 mil of net income this quarter, which is the same as 28 cents of EPS. The EPS expectations are going to go, they reported 28. It's expected to be 82. The net income is supposed to more than double. Like, that's incredible. Look at the sales, 40 mil to 120. Everything here is headed in the right direction. So that's why I bought a little bit of them again. As much as I love them, I wouldn't put a lot of money in that one. So yeah. But yeah, I think they're worth a small little bit of money. What app do you use to show your screen? Yeah, hey, I'm on the basically Apple TV. Because yeah, let's see. Ooh, Kevin said QuantumScape. I don't love, this is a, I think this is a rare earth mineral play actually. Or let me check. Do they have sales? They might not. Well, here we go. It's about to load here. We're about to find out. Revenue, please. Revenue. So yeah, it says no data. So look, when we click on revenue, it says no data because they've never sold anything. They've never sold a product or a service. So the revenue's zero, and they lose 100 mil in net income a quarter. So that's what I'd be careful with. Just the fact that they don't sell anything, they lose 100 mil in net income a quarter, but they can afford this because they have a fortress balance sheet. They've basically been diluting you by 100 mil of net income a quarter. But whoa, Porsche Automobile owns 15% of all the shares. So the largest shareholder is Porsche. They have no debt. So, and honestly, they're probably rallying up because a lot of the rare earth mineral plays have been rallying like crazy. So, yeah. What price is good for AMD? Not anything close to where it is today. Like probably like 225. But yeah. I just hit my first time ever. I've doubled my money on AMD. They're at a crazy new all-time high today. Yeah, AMD's up 8. What went up the most today? UiPath is up 7, Futu 5, Reddit 7, Dave, Robinhood, SoFi, Zoom was up 4. Disney was down though. Clear Secure was down on the government shutdown stuff. Yeah. All right, we'll look at a few more stocks here. Open Door, here's the thing about Open Door. This is basically your interest rate sensitive kind of momentum name. Like what does this Open Door do? They just flip houses. They renovate and like flip houses, and they're not that great at it, to be honest with you. But here's the good news. If we go back to 2021, 2022, when we were in the zero, when rates were zero, they were printing money. Look at the revenue, $4 to $5 billion. But look what happened. As soon as rates hiked up, basically, the sales fell 62, 69, 70, 50. Like sales plummeted. So they're super interest rate sensitive. And that's also why they're rallying. Also, the expectations are not good. The revenue was $1.5 billion this quarter. It's expected to fall to $500 million in 2 quarters. So sales are expected to plummet. Maybe that'll get revised higher. There's also some super activist investor that was like, this is a $50 stock. I just can't believe it. They still lose money every quarter. So it's basically just your interest rate sensitive play. And actually, if we go to what interest rates are going to do, actually, here's another cool feature we can check out. We head over here. We can actually see, where is it? Yeah, the interest rate cut probability right here. On the October 29th meeting, there's a 96% chance of a 25 basis point cut. December 10th meeting, there is another 94% chance of a 50 basis point cut. January 8th meeting, 75 basis point cut. Yeah, that's just based off the Fed dot plot meetings. So yeah, that's why the interest rate sensitive names, like that's why Berkshire Hathaway and basically Warren Buffett are buying a lot of the interest rate sensitive names like Pool, Lennar, the home builders. Oh yeah, and you can track all the watch list right here. Like if you're ever looking for new sectors to invest in, they have like a bunch of different industries you can discover new stocks and like robotics, monkeypox, whatever. All right, so let's keep going here. CrowdStrike. You know what? Let's do CrowdStrike. Actually, no. We'll look at that. We'll look at them in a minute here. Let's look at Trane Technologies. This is one of my favorite like HVAC plays. They're like a smaller Comfort Systems, but they have a bigger market cap. Yeah, they're worth $100 billion. Check this out. And you get in a good yield. You get in your 1% dividend, safe payout ratio. Like I said, all over my college, there's the huge Trane Technology, like HVAC systems. They make great money. Easily $700 million to $800 million in net income a quarter, and it's growing very nicely. I like this company. Like, as rates go lower, it should help them out too. 60% of the revenue is the U.S. They're on my watch list. I'd love to get them at a good price as well. Oh yeah, Tommy. Heck yeah, let's do it. Rollins stock. The valuation's too high for me, but they do a lot of M&A. They do like termite. Look at that. Termite completions. There's 21% of the revenue. It's just like a commodity that like the AI can't really do anything about. Like, it's always just going to be an issue. It's grown nice. It's up 13 after grew 12 after grew 13. So that's at a new record this quarter. Again, residential revenue exposed to residential. Like even though rates are like residential struggling, like they're still growing. It's even in a recession, people still got to fix their termite issues. So yeah, the revenue's up 12 after it grew 7. That's just good. Commercial revenue. Yeah, like commercial like kitchens need it too. So we go to the net income. They're easily making over $100 million in net income a quarter. We go to the cash from investing activities. They just spent $230 million like buying a company as well. So Rollins, I love them. I'd love to buy them, but if we go to the valuation, again, they trade at 56 times net income, but they always trade expensive. They also have a great dividend of 1.1% yield. Dude, I'm actually, you know what? I might, they actually might just go buy them in the Roth IRA at all-time highs anyway, just because they're the kind of stock to just always continue to stay at all-time highs. Yeah, I'll probably add them in my Roth IRA. Maybe they're kind of like remind me like a Perimeter Solutions. Like they're just so unique. We'll look at one or two more here. Joby is kind of junk. I'll tell you why. Here's the thing. I just don't trust these kind of stocks. This is, if you look in the top right, $14 billion company. So remember that. The whole company's worth $14 billion. It's kind of like a $14 billion story because they have no sales, no revenue, or the revenue was 15,000, down 50% year over year, and they lose like 100 million plus in net income a quarter. Again, the momentum's great right now. It just, the whole market's, there's a lot of stuff. This is the market to own this kind of name just because the momentum's so good. But to trust this one in the long run, I think it's tough because, just no revenue, losing a couple hundred mil a quarter. They have a good balance sheet though, but the reason the balance sheet is so good is because they dilute you by a couple hundred million every quarter. So that's my warning. Just don't like the fact that they're legit revenue-less and losing a couple hundred mil a quarter. Just not great. What is this app? Yo, Tiago, hey, yeah, by the way, this is a brokerage software. It's where you get stocks. You buy stocks on here. They send you a tax form and stuff. Yeah, if you're looking to buy stocks and you want to get a brokerage, if you want, this is my favorite one. If you want to get it, Linktree in my bio, very first link there. It's free, no commissions or anything. All right. APLD, APLD, that's also owned by NVIDIA. We can actually check out the NVIDIA portfolio right here. And their largest holding is CoreWeave, but their second largest holding is actually APLD. It's over 7% of their portfolio. They're like a data center hosting company, and they just had some great earnings. That's the reason they gapped up so much on this day right here. Check this out, actually. If you go to the orange line, the orange line is what the analysts were expecting. Analysts were expecting 45 mil. They reported 64 mil. I mean, just a huge beat on revenue and on net income losses. Analysts were expecting them to lose 13 cents. They only lost 7. So just good numbers on there. Yeah, 60% of the revenue, data center hosting. So yeah, I wouldn't buy them at this price, but they're interesting and they're owned by NVIDIA. How'd you learn to trade? Anything specific? Yeah, not really. I mean, nothing specific. I mean, I've just lived it and breathed. I mean, I've read so many books, YouTubers, articles. I mean, I've just been there. It probably wasn't a helpful answer. I apologize. So, hey, New York, good to see you, brother. He says MNDY. That's one of those software names. Yikes, they gap down on earnings. Let's go see what they reported on earnings day, because that is odd. 50% of the revenue is the US, then EU, so that's interesting. Let's check out the revenue. Revenue's up nicely. The revenue's up 26, after grew 35, after grew 49. So they're on a nice little streak of growth. They're just now like getting net income positive. Like they only made $1 million this quarter, but still, I mean, they're making on average net income every quarter, and it's probably just going to go up. Let's see what the EPS expectations are. Yeah, so that might be why they fell so much on earnings day, because analysts were expecting, as we can see, 19 cents of EPS, and they only reported 3. But still, analysts are expecting the revenue to just continue to climb higher. They're an interesting software name. I don't exactly know what they do. I don't know if they're like a Salesforce or something. Digital organizational tools. I don't know. They're interesting. I wonder if they're an AI beneficiary or going to get hurt from AI. Let me see. Let me see if there's any Morningstar research on this. We'll check that out, actually. Morningstar. Yeah, I like this. It says what the bulls say and what did the bears say. Monday.com faces pressure from several well-capitalized competitors. I wonder if they have, do they have a moat, they say? Economic moat is narrow. Okay, well, that's not terrible. Okay, anyway. Any good oil and gas stocks for the long term? Yeah, dude, Tommy, best pick? MUSA. I've looked at all the oil stocks, Exxon, Chevron. I love this one. Is the growthiest way, or the best way to get exposure to oil. That I think is going to be the growthiest name, because they don't suffocate themselves with a high dividend payout ratio. Most oil stocks, Chevron, Exxon, you name it, have like 60, 70% payout ratios with like 4% dividends. But this one only has a 0.5% dividend yield and has a low payout ratio. So what are they doing with all their leftover money? They literally do share buybacks like crazy. They've bought back, I kid you not, 36% of all the shares just since 2019. And here's what the share buybacks do for you as a like they're still not immune to the oil prices falling, hurting their numbers. Like because of oil prices, the revenue is still down 8% year over year. But so is Chevron and Exxon and all the other names. The revenues are also down 8%, or actually a little more than 8%. But if we go to the net income right here, the net income is up by 0.5. So the net income is up by 0.5. But the net income per share is up by 6.36. Again, because the share part of the ratio. Again, the net income growth rate and the EPS growth rate should always be the exact same. The only thing that changes the EPS growth rate is the share part of the ratio. The share part of the ratio went down by 5.5%. Anyway, best oil stock out there, I think. Is that, yeah, hey, thanks. Yeah, hey, by the way, Dio, yeah, if you want to get this brokerage I'm on, I see you're on the YouTube stream. It's actually in the link in the description if you want to get, yeah, this is a brokerage where you get stocks on. But if you're on TikTok and you want to get this app I'm on, it's in the link tree in my bio, the very first link there. All right. We'll do one more stock here. It's for project managing. Oh, okay. That's interesting. So we'll look at Blackstone, final stock here, and then we'll get out of then I'll get out of y'all's hair. Hope you guys have a great rest of your Friday though. And wait, don't go anywhere because right after this, I'm gonna do a whole entire stock portfolio update, share with you all three of my portfolios, how we did on the day, because we got some crazy updates. But let's get back to oopsie. Where is this? Okay, so Moomoo right here. Blackstone, this is an asset manager, basically the smaller version of BlackRock. There's BlackRock and then there's Blackstone. And yeah, it looks similar. They're in private equity, real estate, credit and insurance, unrealized profit. So let me check net income. Yeah, they're making good money. I mean, easily over $1 billion in net income a quarter by far. So that's great news. But the revenue, the sales did fall by 15% year over year. So the revenue fell by 15, but that might be something to look into. I like BlackRock probably a little more because BlackRock has the ETF business, and BlackRock just came out with like these crypto alternative, these crypto ETFs, and those are getting so much AUM fees. They're making a lot of money. But look, Blackstone as well is a nice dividend growth name. You also get a 2.76% dividend yield, so not too shabby for Blackstone. And they've done great since 2019. So there you go. What's this brokerage? Yeah, hey, but again, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. And full disclosure, it is an affiliate link, so if you deposit $100, we'll both get some free stocks. All these brokerages I'm using are all in the link tree in my bio as well. So anyway, let's do a stock portfolio update. Let's start with Robinhood right here. This is known as our dividend-only portfolio, where every stock in here pays a dividend. But as you can probably tell, most of these are like dividend growth names like Meta, Google, Constellation Energy, United Rentals, Carlisle. They all have dividend yields of under 1%. But they still pay dividends because I'm young. I don't want to go with the super high yielding names. Yeah, I'll let these grow a bunch, and then in 5 to 10 years from now, when I need the income, first off, my yield on cost will be like a 5%. But then I'll have so much stock price appreciation, I can convert it into the higher yielding names. We also have a Roth IRA in here worth 4 Gs. We started this basically exactly a year ago, and these are all the stocks that we own in here. And here's our total percent change. Just so choppy. I got way too many stocks. My biggest critique is I definitely own. What is Robinhood doing? I definitely own too many stocks here in my portfolio. But yeah, InnoData has been the real winner. We're up 130% on them. Yeah, all time we're up 10%, 9% the past year. What's this one year to date? Yeah, we're up 18% year to date. The April dip was crazy. We were down 13% at one point. Yeah, but the real winner today was our Moomoo account. We were legit up $1,900 just from Comfort Systems today. This account was up 8.6%. So year to date in this account, we are up 78%. Check this out. Again, during the April dip, we were down just as bad as the market was, 16%. But now we're up 80% literally just from our buy of Comfort System. We bought the stock this year. We literally bought the stock during the April dip, and it's just been a monster performance. Same with Powell Industries. New all-time high on Powell Industries today. Near all-time high on Amphenol Group today. I mean, Amazon's having a nice recovery since its AWS outage. Y'all remember that AWS outage? That was crazy. Oh, yeah, and for MUSA, we bought a share of them yesterday. Oil Play and Ferrari is another one of our newest names. And finally, we have everyone's favorite, my Risk on Webull account, where all time we're up 24% and we're up 3% on the day, mainly from, AMD was up 8%. First ever time we're up double on them. So yeah, here's our biggest gainers in here: AMD, Dave, Robinhood, SoFi, Supermicro. Like, to be honest, a lot of these names I wouldn't touch and I wouldn't buy at their current valuations, like AMD, Robinhood, SoFi. They all trade at like 50, 60 times next year's net income, and I can't pay that. So you can't buy a lot of these names, but some stocks are at some more reasonable valuations. T-Mobile, I think, is at a good price. Calm, Progressive Corp, Sprouts Farmers Market, we're all down on some names as well. So anyway, hope you guys have a great rest of your Friday. If you want to hit the follow button, we stream every single Friday at this exact same time. And if you want to hit the notification bell, I appreciate that too. By the way, I saw nothing. I have no course book, WhatsApp, Telegram. Please watch out for people impersonating me. I'll never follow you, DM you. But yeah, I'll see y'all later. Have a great rest of your Friday. We'll be live tomorrow at this exact same time. We stream every day. Hey, hey, see ya, Dio, Jack. Thanks. Oh, Spy reaching all-time high. Yeah, that isn't that crazy, Jack? That was nuts. Yo, good time. My bad, man. I'm ending the stream right now, but thank you to everyone on the YouTube stream because I'm trying to build on my YouTube channel, and I really appreciate everyone being here. See you, Tommy. See you in IMAX, New York, Jimbo. Uh, everyone, Tommy, one Scal for the freaking $20 super chat. I still can't believe that, Scal. I really appreciate you. Yeah, dude, on YouTube, I used to be able to see your like actual names, but YouTube just changed it where it's like your actual name and it just changed. So some of your names changed on my screen, which is unfortunate.